Hello and welcome to the College Investor Audio Show. So glad you're here today as we take a look at this Parent Plus Student Loan Alternatives in 2026. Private versus federal. Great topic today, and we'll get right to it in just a second, but just want to remind you real quick that if you ever have a question, you want to get to know us a little bit better, we'd love to get to know you. We're on all your favorite social platforms. Just search for The College Investor and you'll find us. We'd love to help you wherever you are in your money journey. You can also check out any article that we talk about on the podcast. There's always an article with it with resources and links and everything you could possibly want to know about every topic at thecollegeinvestor.com. Okay, let's jump right in here. So major changes, as you know, are coming to Parent Plus loans in 2026. For a lot of families, the timing couldn't be more complicated, right? Parents with students starting college this year or next, or maybe already have kids in school, need to make plans for how they're going to pay for it. For decades, Parent Plus loans acted as kind of a backstop. Grants, scholarships, and student loans, if they all fell short, parents could just borrow the rest without any limits either. But starting July 1st, 2026, that does change. Borrowing caps take effect and repayment options shrink. The result? More families are going to be relying on Parent Plus loan alternatives. So today, we explain what's going to be changing, how private loans compare to federal loans, and what families paying for college, right now should be thinking about. Here's why Parent Plus student loan changes matter. The most important shift is pretty simple, but significant. Parent Plus loans will no longer cover whatever's left. Starting July 1st of this year, Parent Plus loan borrowing will be limited to a fixed annual amount per student and a lifetime cap per child. The new cap is $20,000 per year and $65,000 in total. Notice how the annual caps don't add up to the aggregate cap amount. For families at colleges where costs can exceed $30 to $40 a year, that cap means Parent Plus might only cover part of that bill. Equally important are the repayment changes, too. New Parent Plus loans issued after July 1st, 2026 will only have access to the standard repayment plan, no access to income-driven repayment plans. So that reduces flexibility if a parent experiences job loss, reduced hours, or unexpected expenses. Existing Parent Plus borrowers do have a grandfather clause, if you will, on the borrowing limits, but not on the repayment plan changes. So, while they may unlock some flexibility, it could make repayment even more challenging. Parent Plus loan alternatives. Even with tighter Parent Plus rules, federal aid remains a core part of most college financing plans. It just needs to be layered more carefully. Student federal loans. Undergraduate students can still borrow federal direct loans in their own name. These loans carry lower interest rates than Parent Plus and offer loan forgiveness programs and income-driven repayment plans. The downside is the borrowing limits. Federal student loans in the student's name have very low limits, just $5,500 for freshmen up to $7,500 for seniors. That's not going to be enough, sometimes, to cover your expenses. Grants and scholarships, every single dollar that does not need to be repaid, just reduces the pressure on both Parent Plus and private loans. Families sometimes underestimate how much institutional aid, private scholarships, or even work study can offset costs over multiple years. It's true. So for families facing new borrowing caps, revisiting aid offers and asking schools about appeals or adjustments can be worthwhile, especially if family income, assets, or circumstances have changed. Private student loans. Let's take a look at this. As federal Parent Plus becomes more limited, private lenders are likely to play a larger role in college financing. These loans are offered by, of course, banks, credit unions, online lenders, those types of things, either to parents directly or to students with a parent cosigner. Here's where private loans can actually help you. They do have higher borrowing limits. A lot of private loans allow for borrowing up to the full cost of attendance, which can help families kind of bridge those gaps left by Parent Plus caps. Competitive rates, if you have strong credit, of course. Parents or cosigners with high credit scores and stable income may qualify for interest rates lower than federal Parent Plus rates, believe it or not. And customizable repayment terms, too. Some lenders do offer choices between shorter or longer repayment periods, especially since the federal caps will be taking place. There's just going to be more competition in the private market, which can help families manage those monthly costs. Here's where private loans do fall short, though. But hopefully with the increased competition, it'll kind of level things out eventually. There are just fewer safety nets. Private loans generally do lack income-based repayment options, broad deferment rights, and forgiveness programs, too. Credit-based approval. Approval and pricing depend on credit history, income, debt-to-income ratio. Families who relied on Parent Plus because it was accessible may face higher rates or even denial in the private market. And variable rate risk. Loans with variable interest rates can become a whole lot more expensive over time, increasing monthly payments unexpectedly, really. So if you're considering borrowing, it's essential that you shop and compare private student loan lenders and get at least 3 to 5 quotes. This is how you'll know you're getting the best offer. All right, now some key takeaways here. The 2026 changes to Parent Plus loans mark a turning point in how families pay for college, for sure. Unlimited federal parent borrowing is disappearing, replaced by caps and stricter repayment rules. For families paying for college, that means planning earlier, borrowing more deliberately, and comparing private options. Also, filling out as many scholarship applications as humanly possible. Families who understand the new rules and adjust their strategies right now, today right now, will be better positioned to manage costs without putting long-term financial stability at risk. And we're here to help you. Whenever you have questions that pop up in your life, you can always check out the article associated with every single podcast topic at thecollegeinvestor.com, or like us and follow us and all the things on social media. Just hop on and search for The College Investor, and you'll find us pretty much anywhere you are. Thanks again for stopping by today, and we'll talk to you again real soon.